Hey guys, this is Camilo from Trending Waves. Thank you so much for tuning in on another video. So I thought I'd do a video tonight on something pretty interesting, something that not a lot of people are talking about, and that's something that on the when you do technical analysis or when you do a long-term perspective or view, if you will, on the chart, you have to focus on history. Okay, history tends to repeat itself. You guys heard of that term before, and it's true in our everyday lives as it's true in the markets, right? Even true in when you look at charts. Okay, you start looking at patterns and you start looking at historical data that tends to repeat over time. Okay, that's the nature of the markets. So what we're gonna focus on here is just this zone here. Okay, we're gonna look at this area, or we're gonna look at this area. Okay, and we're gonna focus on time. We're gonna focus on wave structure and a little bit of what the investor sentiment and the media, right, how it was in this area here, which is the February high before the COVID crisis, and where we are here today. Okay, and how similar the sentiment is. Okay, so and that actually will help us determine what action we're going to take. Okay, so but before I do, please do follow my Instagram page. Okay, as I mentioned in my previous video, I do daily updates on the S&P, on Bitcoin, or any other market. Okay, and I post some chart setups. Also, subscribe to my channel on Trending Waves on YouTube. All right, so glad we got that out the way. Okay, so let's zoom in. Let's zoom into this area. Okay, as you guys know, this was the high on February 20th, I'd say, and then we went on to do a sharp decline. Okay, but what a lot of people don't understand or probably don't see, okay, and this is why Elliott Wave is pretty useful. So in this zone, we can count 5 waves and then a 3-wave decline. Okay, so if we go up in 1, down in 2, all right, 3, 4, and then 5. Okay, so pretend that this zone, okay, that this area was not here. Actually, let's do something better. Let's do a replay. Excuse me. And let's go here. Okay, we actually just went back in time. So this actually looks similar to this, right? To this zone. If I do a replay again, okay, we kind of see this zone here look similar in structure of that of this. Okay, so back here, if you recall, we were trending up higher in the 5 wave. So we were completing. We said back then that we were calling the top in this zone. Okay, at somewhere between the $3,200 area in the S&P. Okay, we then started printing a 3-wave decline. Oh, this went a little too quick. Let me go back. Yeah, let's do this again. Apologies, guys. Okay, so let's slow it down. So if I press play, okay, we can start noticing that we made a 3-wave decline, okay, on the S&P. And when we moved lower here, we all thought that back in 2020, around February and January, okay, we all thought that this was the start of an impulse, or of an impulsive structure, and that we were ready for the top and gearing up for the bottom, for a corrective move. Little did we know that based on some Fib structures and Elliott Wave analysis, right, we printed, once this whole thing was clear, right, we printed a three wave measure move. All right, so we were forced to look at this differently. We then shifted everything one swing over, okay, and call this a whole impulse. All right, we shifted all of this over and call this wave 3, and then 3-wave move into wave 4, and now we were waiting to wave 5. So what ended up happening here back then, okay, in this zone, was that it trapped a lot of short sellers, okay, because a lot of people were shorting this market. And once we ended up coming higher, there were some news coming out of the coronavirus, okay, and so people were getting alerted, but nobody really knew what was going on, or as a matter of fact, it was very new for everybody. So not a lot of people knew what to do, and we ended up going back to the markets. We ended up moving higher, okay, right before the sell-off in February. Okay, so right around this time was when we printed wave 5 and we anchored it here. But prior to this sell-off, all right, we didn't know what was happening. This was back in February 20th, February 19th, okay, around this time. So keep in mind this zone, okay, keep in mind that. I'm going to delete all of this, and now we're going to focus on our current structure. So just like this zone, okay, just like in here, we counted 5 waves. So if you recall on my previous videos, all right, we were trying to figure out if this was, we actually called this the top of wave 5. All right, so we had a label like this, that we go up in 1, down in 2, up in 3, down in 4, and wave 5 was complete. Okay, let me do this. All right, and wave 5 was complete. We had a lot of evidence that this was in fact wave 5, but as the days went by and we started declining, okay, we sat patiently. And actually, let me take you down to a lower time frame so we can see this clear. So we printed 3 waves down, okay, in wave 4. Okay, as you guys see, that's the replay. All right, so 1, 2, and 3. And what we ended up, when we were forced to do, is exactly what we did back then, which was we moved the wave count 1 swing over. We called this wave 4, we called this wave 3, and all of our fib structures were actually valid, right? Wave 3 ended here. We printed wave 4 in 3 waves. And again, a lot of short sellers were trapped here in this zone. Okay, right in this zone. And now what ended up happening was that we started rallying up. Okay, like so. So now what we're currently doing is that we're looking for this wave 5 to complete before the entire structure is actually done. Okay, let me take you back to the daily chart. Before this whole structure is done in wave 1, and we're looking down into wave 2. So now we focus on the first thing, right? We focused on the wave structure. Now let's look at time. All right, let me clear this out. If I do a vertical line over here at the top, okay, we're going to notice that this was January 24th of 2020. Okay, now let's take a look. Let's take a look at this top. January 27th, 2021. All right, that's the beauty of the markets. These are the things that we have to look at. These are the clues, the small, fine little clues that the market leaves us for us to start looking and understand what this all means and tie it all together. Because in fact, you know, it's hard to say. This we can never predict what's gonna happen in the markets. That's very impossible. Right? First of all, we don't know what the future holds. But what we can do is that we can piece together evidence and start looking for clues that will tell us how to prepare for what could come. Okay? So if with this evidence, right, with this similar wave structure and similar 3-wave decline over here, and over here, all right? It's no coincidence that we're going to start printing a new high, okay? And we're going to call the top fairly soon. So where was this top? This top came in on February 20th, 2020. So does that mean that in the next 28 days or 27 to 28 days, we're going to print and we're going to anchor our high? I don't know, guys. I am not sure. But based on this evidence, I mean, it's clear, right? It's kind of, the market is telling us something. The market told us that we are already at the near top, right? We've printed basically 5 waves to complete wave 1. Okay, we're now looking for our final push in wave 5 of 1. Okay, we have targets. If you looked at my previous videos, we have targets for where that could be. All right, so yeah, this is, I mean, and then so let's talk about market sentiment. That's the last bullet point here. So if you guys recall, right, everybody was bullish in this area. Everybody saying new highs, record breaks. The Dow Jones is rallying 600 points, 400 points. The SP500 new blue sky breakout. Okay, and then but there were talks behind the scene of the coronavirus pandemic. Okay, but nobody really knew what was happening. So that's something new. What's different today? Nothing really. We all know we are all eager. Right? Everybody's eager to reopen the economy. Everybody's eager to get back to work. Vaccines are out, and a lot of people are getting vaccinated. Well, the elderly and essential workers, right? But little, behind the scenes is talked about the new strain. It's in the headlines, right? That the new strain of the coronavirus is out, and it's deadlier than the original one. I'll call it the original one. All right. But this is what's a little crazy, that all of that was overshadowed by the frenzy and the GameStop craziness, I'll say, that just happened recently. So similar, right? Similar sentiments, similar points of views, and that what's gonna happen now? News are gonna start flowing in about this new strain. These vaccines are no longer going to work on this. I mean, God forbid, because I am for the economy. I want everything to get back to normal. Unemployment is super high. People don't have jobs, don't have money to eat, money to buy food to eat. My apologies, and it's not a good thing. So my point is the following: we as traders have to be careful, have to trend wisely, have to look at the clues, and manage our risk. If in fact we are to print new highs with relatively soon, I'm not calling this zone here the top. That's not what I'm trying to do. I'm just saying that when we reach middle of February or end of February, it's time to start looking for further clues, and analyzing and stepping back to take position into the short side. Okay. All right, guys. So that was my spiel for tonight, and I hope that this doesn't scare you, because it's pretty much not a lot of people talk about this. All right. We have to be careful, and hopefully this helps you. And if you have any questions, just shoot me an email, comment below, or follow me on Instagram. Okay. Alternatively, you can always subscribe to my channel, and I'll talk to you soon. Okay? Take care. Bye-bye.